Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. It was here on this contract 5 weeks ago that I first saw what in hindsight was a fairly obvious April to mid-June head and shoulders pattern for neckline that had been just below most of the very recent market action, currently at 1177. Now, the reason it was special was that I transposed this same pattern to all the grain markets, the wheat markets, and it worked there as well. The primary target was reached by the end of June as the market hesitated in the pretty heavy-duty congestion zone between 10:01 and 9:57. However, the hesitation was not appropriate to the size compared to what I thought it deserved, and soon enough prices punched down through it, extending the move lower and reaching the harder to reach secondary target. Now, the subsequent reaction back up was somewhat unexpected. I can only really put it down to a reaction caused by the congestion between 855 and 881, which contains the 50% Fibonacci line of the September 2019 to May 2022 move at 881 and the flatlining long moving average, currently 955. Monday last week saw the market opening higher within that congestion area overhead, but pretty soon dropping back down through the long moving average and the fairly free area down to the 50% Fibonacci line of the August 2020 to May 2021 move at 900 even. Yet again, the 855-881 congestion zone slowed prices down and established what looked like a wider range between the early July lows at 828 to the 50% Fibonacci line of the August 2020 and May 2021 move at 900. After some intraday indecision this week, prices have seemingly decided to reawaken the bearish incentive, with a weekly key reversal down last week and head lower after that. This gives this market all sorts of possibilities. You see, we could regard the action since the middle of June as a possible bear flag action. If this happens, then we could have a possible target X in the 691 area. This would be a big step as we have a lot of congestion on the way down there from late last year between 855 and 748. Now, a couple of patterns and levels to watch. We may start seeing increased support from the extension of the October 21 to January 22 head and shoulders pattern continuation pattern, and that's currently at 808. Then down at 791 and the 787 levels, and the 762 to 764 area, and then the January lows in the 748 area. And usually this support is a little small relative to the overhang we have of the February to June action. So I suspect we may see, much as in other grains, the support and congestion low being given a good run for its money. Minneapolis wheat. Okay. So I had previously pointed out here a big head and shoulders pattern formed from about mid-April until late June. I had drawn a neckline, currently at 1250, and the market started punching down through it. There was a primary target in the 1089 area and a secondary harder to get target in the 973 area. These are big asks for this market, but they were achieved. This left the market open for what we saw 2 weeks ago, a drop down all the way to the 2022 low at 871. That initial drop halted and turned back up again with a 3-day bullish morning star pattern that saw a follow-through higher early this week, or early last week I should say, up to then rapidly declining short moving average, currently at 943, and almost as high as the flatlining long moving average, currently 1054. However, the bullish incentive here rapidly expired with Monday's bearish dark cloud cover pattern, and prices fell again, only not as far as the lows of 2 weeks ago. Now, there is no weekly key reversal here, not key reversal down here, as has been in some of the other week contracts. But as I said last week, and I quote, there is enough bearish incentive for two things to possibly happen. Firstly, for a test down to the recently formed 2022 lower 870, which is not such a big ask. Secondly, if the first scenario happens, then we could look at the mid-June to date action, possibly forming a bear flag type action. Now, it's too early to say, looking at the target below for this, but it's time to start considering this should it happen. Otherwise, we have a possible, if It doesn't work. Otherwise, we have a possible but weak-looking double bottom. End of quote. This is still the current situation, but the difference today is that we are further advanced in making that choice than last week. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. Here comes the final bit.